Okay, good morning, everyone. Welcome to another episode of the Crypto Hour. Today is Friday, 20th of February. First of all, a little bit of housekeeping. I am away next week, so won't be a Crypto Hour for next week at the end of Feb. So I'll be back as normal in 2 weeks time. So let's go and see kind of items worth discussing for today. In the meantime, you prepare your questions because there's going to be plenty of time for question and answers today. As I don't have that many things that to talk about. So as much as I like talking, it's good if you prepare something that's of interest to you. Okay, let's start sharing my screen and let's go with the. Okay, first of all, let's look at the economic calendar. So this week we had, as I said, it wasn't particularly heavy in terms of economic news. We have inflation in Canada that is pretty much like stagnating, so it's at almost getting into deflation mode. The moment is at 0%. New Zealand kept the interest rate steady at 2.25%. Nothing particularly dramatic. The job numbers were a little bit better than expected in the US yesterday at 206,000 new unemployment claims rather than expected 223, but the long-term unemployed numbers has gone up slightly. So, but we're still in that range between 1.8 million and 2 million, where we've been in for several months. One thing that's surprising is that, with all the repatriation that there have been in the US, that there are the unemployment figures haven't really gone down more than they have done. But that shows you that the job market, although it's not suffering too much, at the same time it's not too buoyant either. So the other, probably the most important announcement of the week was going to be today, which is an inflation figure, the PCE price index, which is the one that the Fed uses as a base for its rate setting. Okay, so again, a low number, it just increases the likelihood of a rate cut, and a higher number then decreases the likelihood of a price cut. So there might be an effect on, especially if the number is different from what it is expected, it might be a readjustment in prices in several markets that are connected to the US dollar. Okay, so keep an eye on it if you are in the trading arena this afternoon, or about 4 hours from now. Next week, let's see what we have got on inflation figures for Australia, and nothing else really worth of note too much, unless until Friday, where there will be all the producer price inflation. So again, another inflation measure at producer level rather than consumer prices. So nothing too dramatic to look at. But there is the one thing to keep in mind is that something that may or may not be happening today, which is the Supreme Court could rule on the tariffs, on Trump's tariffs today. So the decision will be, are they or are they not legal? Has he overstepped his powers? Because tariffs, taxation is the down to Congress to set, not to the presidential powers. So there is a possibility that the Supreme Court will rule against the tariffs, pretty much having to scale all the tariffs that have been charged so far back, and that would mean having to refund many businesses that have to pay tariffs. So, this is the first step in the salvo. So what happens next, it still remains to be seen, because because Trump has discretionary powers to then introduce new limited tariffs for the next 3 months or something. We could carry on this game going backwards and forwards for a little while now. But in case it was the Supreme Court ruled against the tariffs and there wasn't any opposition from the presidential office, then that would mean quite a few hundreds of billions going back into American businesses. They have to pay higher prices for the goods that they have to import. So, but it's mainly, as you know, you can say it's a constitutional question. So the law that they've been using for that wasn't really meant to impose new import taxes, which is again something that should be done by Congress. So it is very likely, more likely than not, than these tariffs are going to be deemed unconstitutional.
Yeah, but what does that actually mean, Luca? Because he's had other court things that they said he's a this is not right, that's not right, that what you know the way he is, he'll probably blow it off. Sorry, but that's because that's just his attitude, you know?
Yeah, that is it. That is his attitude. But this is a Supreme Court that we're talking about. So unless we are, you tell me that it's turned into a dictatorship and not to a democracy. I mean, I think the Supreme Court has to have some clout, and the laws will need to be applied, and there are going to be claims. So the interesting thing is that what's happening in the background is something that you don't see, is that hedge funds are buying refund rights. So they think that this thing is going to happen. They're paying about 25 cents in the dollar for the right to receive these refunds. So businesses are basically saying, if they don't want to get involved in this process, because I don't know how long it's going to go on for and how complex it's going to be, they're selling their rights to hedge funds. So obviously there is money in it for the hedge funds to do this, because they don't part with money easily unless there is lots of money to be made. So the expectation is that this is going to happen. Then the devil is in the details at the end, but it is likely, at least the judgment obviously is going to happen at some stage, and more likely than not is going to be against the president. Then what happens then we will see, but there is going to be a legal case then that if hedge funds are involved, they are going to ride it as hard as they can. Then, as I say, it's a wider question of democracy in the US, which is a different thing. Now, let's go and have a look as well at what happened in this past few days in the in the market. On the market, especially, we start to look at the crypto ETFs. So we can see at the moment we still have net outflows in the ETFs this week. Again, the ETFs being dominated by Bitcoin and Ethereum, and then there's a little bit now of also XRP and Solana. But it's funny to see. Just look at this. We had the outflows both for Bitcoin and Ethereum, but inflows for XRP and Solana, which is interesting. If we we can see the Bitcoin ETFs have 7, 8. So there's only 3 days in here. There is no data about yesterday. I don't know why. Kind of the first 3 days of the week were all negative. So we're about just about 400 million down on the week. But nothing too dramatic. Ethereum a little bit more of a mixed bag. So still 100 million negative. And let's have a look at Solana. But the difference is the Solana. So it's a good sign if some of the smaller coins, other than Bitcoin and Ethereum, are starting to see positive inflow. So it means that there is still an appetite. So both Solana and XRP have experienced positive inflows this week, where Solana in particular, about 10 million inflows, where Ethereum and Bitcoin have seen outflows. So you know, a little bit of food for thought, and it means that there is some positional money starting to flow back into altcoins, which is a good thing. Because, you know, on one side we see, you know, every week we look at prices and we think, you know, what are prices going to do? But on the other side, we need to realize that there are people in blockchain, they are working every day, whether we are in a bull market or bear market. The progress is moving anyway. We are moving in the right direction. Developing products, they have a everyday use, and that eventually is going to pull through. You know, we're talking about here early stage investments. So early stage investments take time to develop until they then come to fruition. There's something I wanted to show you. There's nothing to do with Bitcoin. So this is not, it's nothing to do with silver, rather, not particularly silver, but I wanted you to look at Amazon shares. So especially if we go and look at, you know, you see, you know, if you bought Amazon shares at 10 cents, you know, and now they are $200, you'll be a multimillionaire. Okay, fine. And that is true. But then, you know, you know, everybody says about it's, you know, Bitcoin is volatile and something like this. But, you know, you could have got at the beginning when Amazon launched on the stock market, it was just over 10 cents. Okay. It then went up very quickly in 1999 to about $5. Okay. It's a movement of 50 to 1. Yeah. So if you bought Amazon like below $1, then obviously you would have done pretty well. But the question is, would you still have those shares? Because would you have taken a drop from 565 to 27 cents? And that's the question. So that is a 95% drop in 2000 and 2001. And also here, when we look at 2007, so even this is well over 10 years after, you know, after it was launched, another drop of 60%, 65%. Yeah. 2024 as well. 30% drop. So the question is, you know, it doesn't mean simply because something is, you know, is up there or is done well. It's what is the outlook? So had you bought Amazon, would you have gone through this period between, you know, 1999 and 2002, really, you know, where the price dropped 95%? You know, it's easy to say, yes, I will still be holding it. But there isn't any, so with early stage investments, there isn't any less volatility than with some of the crypto coins that we've been used to. Simply because Bitcoin dropped 70, 80%. But we can see that if we look at history, some of the most successful companies, they are at the top of the indices today. They had similar moves in their early days. You know, and even recently they've been experiencing drop of, you know, 30% plus. So this is the most recent one, was that in 2022. A 56% drop in Amazon shares. And so when we then look at Bitcoin and just put things into perspective, what we are looking at today, it's, you know, it's a significant drop, you know, but 52%, the current, so the maximum from top to bottom of this at the moment of this drop And we had 77% in 2021-22 when we reached the previous high. So the interesting thing to see, and we were discussing this last week, there are quite a few factors of, from the point of view of analysis of the charts, there are quite a few factors there of confluence. First of all, this blue line here is the previous high of the previous cycle, 2021. And if you can see now, we are hovering just around that price. So we have gone beyond it, but so far no month has actually closed below that. We're still around that figure. So we've gone down to 60, but we've gone back around between 68 and 70, where we are right now. And also another thing to note is that there is, there was, when we first reached this point, there was then a considerable move to creating what was then a new high. And where we are stopped is really at the zone that was at the origin of it. This is where the market is actually at the moment is pausing and it's turning around. So we'll see how that develops in the next few weeks. But in every market, in every cycle in Bitcoin, we tend to establish pretty much a bottom close to the previous cycle's top. Can you see here in the 2017 top? And then in 2022, we stopped just below that price after reaching a new all-time high of about 70. We stopped at around just below 20, and then we started the climb back up to this cycle high. So there is very likely, nothing is guaranteed, but it is very likely that the bottom of the cycle is going to be somewhere around this point. Okay. So we could already have been establishing a bottom of 60,000. We don't know. We might see another dip to below 60 and 50. It's everything is possible. But there is, at the same time, there is definitely some pushback here from, obviously, this is like already 1, 2, 3 weeks that we keep to these levels. The price keeps pushing up from these low levels. So obviously there are lots of lots of institutions, lots of people that think that this is a good place to buy. Otherwise, there wouldn't be. You wouldn't see that. You'll see price going through this zone without any problem at all. So we've seen 60,000 was a big buying that pushed the price all the way back to below 70. And again, when we got to 65, there was another buying spree in the 66. So at the moment you can see the momentum on the way down is waning. Okay, so 3 weeks of fairly sizable price drops. Now 2 weeks the price has done hardly anything at all. Yes, it's still come down from 70,000 at the moment to 68. That is not really a big move in Bitcoin terms. So generally what we might be seeing, it's the formation was called the cap and handle formation. Okay, so this kind of structure, which then does something like this. So we'll see if that's the reality, but this is at least the angle of the angle of incidence now is showing us that there is significant resistance around this point, with significant support, around this point that can maybe push price the other way. In the macro environment, we see money creation at the moment. So there's liquidity being injected into the market, both in the US, in Europe, in China, and in Australasia and so on. Where it tends to end back is in the price of assets. So I'm still expecting now for the next 6 months at least, I'm still expecting assets in general to go up. So I'm not talking just about Bitcoin. I'm talking about stocks and shares. Talking about metals. I'm talking about all the things they have been pulling over the past couple of years, semiconductors, stocks and shares, are expecting still. I'm not. I don't think that the market will go wild, but I'm still expecting the market to hover around the all-time high, the S&P 500, for a while longer. And also Bitcoin being a small player, because the crypto market at the moment is tiny compared to the share market, to the bond market. It's very to the forex market is very small, and so it's very susceptible to liquidity. And then as Bitcoin recovers, so all the other crypto market is almost like hanging on the coattails of Bitcoin. And as Bitcoin recovers, then we'll see the retail interest coming back into crypto that will manifest more in the smaller coin than it does in Bitcoin itself. As we see even this week, we can see interest in the Solana and XRP ETFs more than you see in Bitcoin and Ethereum. So one thing I wanted also to show you, so I don't have any news to show you this week. The only one that I was reading about, it was the part of the drama in the past few days. And again, so as you can see, in the past few days, there was today and yesterday was slightly recovering price, but Monday and Tuesday price went down again of about 4-5%. And there was a lot of talk about quantum resistance. There was a post by a famous analyst that said that there are about 4 million bitcoins have the public keys exposed and private keys, so that they could be vulnerable to a quantum attack. Okay, so then that caused an outflow as well, and it sounds like it caused an outflows in the ETFs as well, and also the Bitcoin price has suffered because of it. Now there are lots of there are some projects that are already done the work for quantum resistance. Have literally just found a few names. If you want, I can share with you. Probably the most famous project that you might have heard of is Algorand and Starknet. Those are maybe the ones that are more well known. But this is a few tokens. They have got like quantum resistance. So if you want, I can copy them for you. Mainly QRL, QANX, Algo, and Stark. Okay, so Algo and Starknet are the two big ones. The other ones are fairly small tokens. But the QRL is the one token that it's probably the bigger one of the pure, so much quantum resistance that it's that has seen some interest. Let's go and see. I haven't even checked if it is on quantum resistant ledger. There we are. Is on MEXC or Bitmart. Let's go and have a look. Okay, so it's still, it's had a lot of growth since the beginning of last year when it was trading about 30 cents. It went all the way back at beginning, literally at the end of 2025, went all the way back to almost like 360, and now it's back to 180. So this is not something for the faint-hearted. Okay, so we are talking about token that even if it's done very well, it just dropped about 50%. Okay, but if you want to play around in things that are moving very much, then feel free to look. And so in a minute we'll take question and answer sessions. Another thing that I wanted to share with you is something that maybe I'll let Jonathan. Jonathan, are you there? I'll let you describe maybe Strike. Is Jonathan in the call? No? Hi, Jonathan. Are you with us or are you busy somewhere else? Okay, so I'll cover this for you. So this is an example. This is the kind of thing that Jonathan shows you in when he does his Cardano base crypto hours. This is like Strike Finance, one of the DeFi protocols in Cardano, which is now they are making moves, trying to also be present on Solana. But just to give an idea of what can happen in a in a protocol like this. Like you can provide liquidity for people to trade in particular things. So the main things on this, as you can see here, are Cardano, Midnight, and the Strike token. Just to give you an idea of how well these protocols can do, this is generated a monthly revenue of 1.2 million ADA for the last 30 days out of a pool of about 4 million. So we're talking about 25% in the last month alone. So it doesn't guarantee that it's going to happen every month, okay? But it shows you that it kind of can be significant results. But also you are risking because you are providing liquidity in Cardano tokens, which can go up and down. So obviously the rewards are in ADA tokens themselves, or if you provide Midnight in Midnight tokens, the results are for the last month, the monthly profit of the protocol was about 800 Midnight, on about 1 million tokens they are deposited on the protocol. Okay, so it can be significant. Let's say the Strike tokens haven't had such a brilliant result in terms of monthly trading, but this is what you would do. Kind of like you would connect your wallet, you will deposit some liquidity, and say you can see here it says the minimum of 5,000 ADA to provide liquidity, and then you participate in the pool, and you get rewarded with when people use the pool to trade, then you get a small fee. So you basically become, you're in the house of, when you're talking about the casino, you're the house. You're not the person that goes out betting. You're the one that provides the liquidity for them to do that. So you can either do that, or you can actually stake. If you have Strike tokens, you can deposit them and stake them and receive rewards in Cardano. Or if you're active, you can also use this as an exchange to swap Cardano tokens, and they also have perpetuals. So for people that want to trade, different Cardano based tokens, here you can either trade ADA USD or Midnight USD, and you can trade at the same way that you would trade in an exchange like Binance, but this is all decentralized. So you can also trade with leverage if you so desire, and if to do that you need the liquidity that is provided by the liquidity providers. Okay, so when you go to a swap like this, okay, and like you want to swap ADA for anything, for any of the Cardano tokens, like for example NewNet token. Now, how does it work? Because this is not a company like Binance behind it. Okay, so the way it works is that you have people deposit both Cardano tokens and in this case NTX tokens in what is called a liquidity pool. So then when you want to go and exchange this token in a decentralized way, what you do basically, you just exchange it. If you want to buy NTX, you deposit ADA and you take out NTX, and the other way around. And obviously, depending on how many people want to buy and sell one thing rather than another, the relative price adjusts in real time. Okay, so for this to happen, you do need a liquidity pool. So you need these tokens to be available for people to do the swaps. And this is where the liquidity providers come in. Okay, and it's not, so this is just one example because it's something that we've been kind of playing around with in the past few weeks. But there is any, so you can do this on PancakeSwap, you can do it on Uniswap, you can do it on all the DeFi protocols. You can you can do similar things. So and obviously there are some are going to be better than others, and the kind of the magic word is how much liquidity do they have available for you to trade different things. And the more liquidity is around a particular protocol, then obviously the better it is, the better prices you will be getting as well. Okay, any questions about this or anything else what we talked today, or any questions about crypto in general? Let me just stop sharing so I can see you guys. Hopefully I haven't confused you too much. Do you understand what I'm gonna ask you now? Who can understand? Who can explain back to me what a liquidity pool is? Go. It's just like
Well, people
observe.
can loan tokens to a pool, and then it allows for swapping amongst different tokens in the same, probably the same network, right?
Yeah,
Because
so
ADA and
basically,
these other ones are in the same network.
yeah, so it's a decentralized exchange. It's amazing. So normally when you want to buy and sell crypto, you go on Binance or you go on Coinbase or something like this, and you exchange crypto that way. But then you exchange it against the company. Okay, they're selling it to you, or you buy, you're buying from it. In the decentralized way, there's nobody on the other side of your trade. So you're not buying or selling, to another person. You're doing it directly from the pool. So there are those tokens there, and you say, okay, if I want to take that token there, how much of the other token do I need to provide? And you got that quotation, and then you deposit one, you take out the other, as simple as that. And then the price adjusts because if people buy just one type of token, then the price of the other one will go up, and the other way around. So it's like a scale. It moves. The more people buy one way, and the more the price of that token goes up, and the opposite in the other direction. So basically it's a system to enable people to buy and sell tokens in a decentralized way without anybody on the other side. And this is what crypto does. Like Bitcoin was invented to be able to exchange value, without an intermediary, without a bank manager, without trust, being able to check all the items in the conversation. Jonathan, hey, you're back with us.
Sorry, my phone's not playing ball
Yeah,
today.
we were having a conversation about Strike Finance, actually.
Yes.
Yeah, so we're showing them what it can happen on a real protocol, and kind of the things of why you might want to deposit liquidity. And now the one thing, obviously, we don't talk about it very often here, but one of the risks of providing liquidity is that one of the tokens in the couple that we selected, people don't like very much. Okay, so basically, let's say that you have, I don't know, Bitcoin on one side and a Bitcoin meme coin on the other side. Okay, so you deposit some Bitcoin, you deposit some, I don't know, Luca coins on the other side, which is a meme coin, and so everybody then sells Luca coins and collects Bitcoin until the pool runs dry. So then what would happen in that case? You're left with a big bunch of these coins that may be completely worthless. So although you collect fees when people exchange it, those fees may not be enough to compensate you for the loss in value of the coins that you're left with. So it's if you play this game, you got to be very sure that both coins they are worth something, because you could end up holding a bunch of nothing in your hands. That's it's a real risk. We're trying to put it in like a common term, right, to make it too complicated, but it is a common risk because that's the way that generally coins are launched. So when people launch a new coin, they provide some liquidity. So a token that nobody has heard of, and what they do to attract users on the first few weeks, they offer incredible returns. Like you can get like 300%, 400% per year if you if you provide liquidity for for these pools. So if the token then has a certain measure of success and start trading, it's fine, everything's fine. But what happens if you let's say provide $1,000 and you receive hundreds of thousands of coins of this coin that nobody knows, what you would do, you try to get your investment back. So you sell those coins to get your money back. So what happens is that then you receive these coins as a reward, but those coins are losing in value pretty much by the minute. So and that's the game. That's the game how crypto tokens are launched. So unless there is a strong community behind a token, you might end up holding a lot of something that's completely worthless. Okay, so be very careful if you interact with DeFi, that you are interacting with tokens that have got a solid base and they cannot completely go to zero. And so this is just like the first thing without going deep into decentralized finance and the kind of ways that you can provide liquidity, but be very careful what you interact with, what kind of tokens. Even everything else being perfectly okay. Like we're not talking about anybody scamming anybody. This is just like blockchain and the way it works.
Like a miniature version of the finance markets, really, and how vicious that can be. So
yeah, exactly. But it's funny because like when we look at these things, we think we go back to our experience. When you see something like say 300% a year, what's your first thought? Like a financial product, like a bank deposit or something like that pays, where you deposit your money and you get that interest. Well, it doesn't work like that. This is like 300% a year today. Tomorrow maybe 120%. In a week's time, maybe 10%. So it's something that changes literally day by day. It can change very, very quickly. And the rewards are never in. So when you see these high percentages, bear in mind the rewards are in crypto coins. So the value is only as good as the value of the crypto coin that you receive. So if you receive Bitcoin back or a stable coin back, it's easy to attribute a value. If you receive a coin that nobody has heard of before, you might not be able to sell it really because nobody wants it. Okay, so hopefully I've made you is not teaching you everything there is to know, but I just meant to make you a little bit curious to go and dig deeper and find out by yourself if you are at all interested in this kind of environment. So yes, there is a lot that can be made in decentralized finance. There's also a lot that can be lost. Okay, so tread carefully, but then educate yourself. Okay, any questions?
But Luca, in that context, how could I've just got some news up on crypto, and it talks about the CME Group has plans for 24/7 crypto derivatives trading. How might derivatives impact that side of the market? Or crypto in general? It's probably a bit better question.
Yeah, so derivatives are in a way they are derivatives. This is what it says on the thing. So they're not the real thing. So it's a way for people to, the same way they use what's it called? If you use a CFD product, so if you're trading with a broker, so you trade on the price difference between things. You're not necessarily buying or selling that thing. And it's the same thing with crypto. So it's already. So derivatives the idea of the CME group allowing that doesn't really change things very much, because in crypto derivatives are already trading 24 hours a day, 7 days a week. They are just telling you that the regulated markets will be probably turning onto a 7-day market rather than 5 days market.
That makes sense.
So simply will give, institutional clients more time to trade, but who would be trading at the weekends when most of the offices are closed? I mean, I don't know if it's going to make a big difference, but as I say, these products are already available in the blockchain world. So many crypto exchanges have derivatives trading that you can access 7 days a week. So it's just like a subset of that now that, the difference is that if the CME group gets into it, these are regulated products, as opposed to like a company that allows you to trade derivatives like Bybit or Binance. But it won't make much of a difference anyway, because it's already happening.
Thank you.
Yeah. Okay. Who else wants to ask anything or contribute anything? If you find out a piece of news that's worth sharing, then please do.
Well, apparently the T family hosted the World Liberty Forum this week.
World Liberty Forum, so like Trump's. Yeah.
But the fact that he got together influential peoples within the US regulatory side of things and traditional finance, as well as the big bots in the larger exchanges.
Yeah, I mean, look, the fact that crypto now is here to stay, I don't think anybody can deny. What I think many crypto people are upset with is that they are pretty much trying to appropriate it for their own use, rather than for the principle that crypto was created for.
Yeah.
I don't know, they're just trying to use it as they have used any other asset for their own enrichment. But yes, I mean, you can see that when I started doing this sort of thing in 2020, nobody was talking about crypto. You'd have to dig really deep to find any crypto reference in the mainstream news. Now it's everywhere you look. So obviously it's a thing. Everybody knows that it's a new technology, that it's growing, that will do a lot of the things that will provide a lot of the infrastructure that we need to do things like that. When the CME group saying crypto derivatives trading, what that could be, it could be like the test for going into like 24 hours a day, 7 days a week share trading, because that could happen. That could happen as well. There's been talks about that, and there are some platforms, that have been developing a tokenized assets market. So that's on the cards. It's going to happen. They just have to agree on exactly what it's going to look like. But tokenized assets are the next big thing to happen, and when the infrastructure is right, also do tokenized property, that will be releasing basically trillions of dollars worth of value, because then you'll be able to use your tokens as collateral in property tokens as collateral in all sorts of things now. When now it's still restricted to banks and financial institutions, mostly to leverage property.
Well, it's interesting because that the Cointelegraph, which expands on the World Liberty, announces tokenization tie-up or the Trump Hotel. So World Liberty announced at the event that it has partnered with tokenization firm Securitize, with plans to tokenize loan revenue interest in the upcoming Trump-branded resort in the Maldives.
So basically what they are doing, so what that is telling me, and I haven't read that thing in particular. So let's say what in a financial instrument will be a swap. So you basically you pay cash and you get like a revenue stream in exchange. Okay, so this is what they're talking about. So they have these hotels, and I think in the hotels they will give you whatever 20% of the revenue of the hotel in exchange for hard cash today. So we can go and build more hotels. Okay, so that's the deal that they're talking about. And that operations like this will come on. There are already some on chain. So if you look at tokenized platforms like Ondo Finance, for example, you already find these sort of deals on there. Now, obviously, as soon as you hear the name Trump, obviously it's got more, more publicity, but it's already happening. And so the structures that it's having the infrastructure in place to be able to do that, because like if you do it on property, for example, so in here they're talking about property revenues, so it's a financial tokenization. But if you're talking about property rights, then it gets more complicated, because then it needs to be enabled at the the place where the property rights are kept. So whatever it's called in your country, here in the UK, or we have the land registry, for example, they keep all the property records. Then they need to be geared up to be able to tokenize property. So, and that is kind of a lot of a slower process, because you need to involve public organization to modernize, and some of them are just still like still doing things with pen and pencil and eraser, so it's a big step. But it is definitely a process that has started now. I will progress. Will progress and which will give a lot more safety as well in this security of the transaction, property transaction themselves.
Thank you.
Jonathan, anything you want to report? Any news in the Cardano world this week, like a little soundbite of what you're going to talk about later?
Just been excited to see that yesterday the USDC X token appeared on Cardano mainnet now for the first time. So we actually have the ability for direct transfer of USDC from Ethereum blockchain through to the Cardano blockchain, through exchanges, through any mechanism, and that's going to work cross wallet in all the major wallets. So it's a real opening up of the ecosystem in terms of.
Wow, that's major. That's major news. Actually, I missed that. So how? Just tell us. Have you had time to see how, in practical terms, how would it work? So you have like a Cardano wallet, for example. Can you then send from your MetaMask wallet, from your Ethereum? Can you send USDC X whatever directly to your Cardano wallet?
That's one of
Yes?
that's one of the features that I'm yet to get a straight find a straight answer for. Yeah. So certainly the primary focus is to get it working through exchanges. So if you've got USDC, you can send it to your Kraken and get it straight back out again into Cardano blockchain, or send it from the exchange to any of the chains out there. But really what we want is to be able to send it from one Ethereum wallet to a Cardano wallet. And that's the hope, the promise. I just haven't seen it in practice yet. And it was yesterday that it launched, so we'll see how it plays out. But I suspect that that's what we're aiming for, so that's what we'll get. It may well be that it goes via the Midnight blockchain instead of doing a direct wallet to wallet transfer. But effectively Circle need to maintain a certain level of regulatory compliance that means it's not as we don't have bridges and things like that for USDC. So this will be a a true implementation at the the layer one of the blockchain that understands the restrictions of tokens moving through it. And yeah, USDC will have those restrictions that it has anyway on any chain, but it will work cross wallet is the hope, the desire. So we'll see how it pans out. But yeah, I'm
Fantastic.
still a bit in the dark about exactly
Yeah.
that point.
And guys, for those of you that don't understand why this can be so exciting, because one of the things that's been bemoaned of Cardano is that the absence of any major stablecoin that limits the amount of amount of kind of interest in DeFi in Cardano because of not being able to have any of these major players and moving funds easily between places. So if that obstacle is gone, then it's you can see kind of quite an increased flow into the Cardano ecosystem as well, because of ease of use apart from anything else. So yeah, any news on the mainnet launch on midnight?
Midnight. Yeah, there has been a date announced. I think they announced it at Consensus in Hong Kong. It's just happened. But I didn't actually take down the actual date. So we've got a target, which is very, very exciting. They're launching with a federated mainnet. So that means that the operators of the nodes on the blockchain are all going to be known entities. So Cardano launched this way, and Midnight's doing the same. And the difference this time is that the federated players aren't just IOG. This time we've got big guys involved as well. So they're actually got Google running significant part of the infrastructure for Midnight's launch. And then they're announcing, multiple other players, more traditional players within the crypto space, like Blockdaemon, as we go. So they're going for the large corporate bootstrapping of the network, which is, the much more inclusive way to launch a blockchain, I think, than Cardano managed to do. So we'll see adoption, I think, pick up a lot faster at Midnight, which is just ideal, because anything that benefits Midnight benefits Cardano, and Cardano needs a breath of fresh air, that's for sure. Yeah.
Oh, fantastic. So yeah, we'll be able to cover more of that next week, where we have a bit more detail, by next week. But definitely, guys, I mean, this is, if you are still sitting on the fence with crypto, this is probably one of the best times to put some money in, because we have some really quality tokens at prices, kind of discount prices from 5 years ago, really. And it might surprise the speed of, it might happen in 1 month, it might happen in 6 months, it might happen in a year, but the speed, when they do start moving, the speed of it would surprise everybody. And also we're even seeing at the moment with kind of prices of gold and silver for no particular reason, from one moment to the next, it just moves by 4, 5, 6%, in a matter of almost like minutes. And the thing with crypto, because it's such a small base, that kind of like 5, 6, 7% move can happen for weeks on end, day after day after day. And this is what happened in 2000 and 2021, kind of like almost like, you kind of like asking yourself, when is this going to stop? Just like it carries on, like with no apparent pause. And this is what I've been waiting for. Unfortunately, everybody was waiting for it in 2024. It didn't quite materialize in last year either. But the underlying conditions are right for it to happen now. We'll see if what we're all expecting actually will happen by Q2, Q3 of this year. But remember that one of the biggest thing that we have this year that we didn't have before. We got the American elections. Okay, so there is a lot of there's a lot riding on the midterm elections in November, and obviously there will be lots of giveaways between now and then to entice people to vote again for the Conservatives. Okay, so there will be fiscal giveaways, lower taxes and stuff like that, which will then work as throwing fuel on the fire on the economy. And crypto will be part of that narrative. So hold back if you're suffering. If you're suffering, just hold back a little bit longer. And if you're sitting on the fence, maybe start thinking about getting involved, because we will see really big tokens going, 5 times what they are now, 10 times what they are now, sometimes even more than that. And it will be more like the norm rather than anything else, because they've gone down now so much that it's really they're really a lot better products than they were like 3 or 4 years ago, but at the same price. So you're getting a lot more for your bucks. Anyway, we come to the end of this session as well. Every week at 9 o'clock. I remember I'm not here next week, so I will see you again in a couple of weeks time. And in the meantime, have a good weekend. Be watchful and enjoy crypto in whatever form you might be interacting with it. And Jonathan, I'll see you later on. Okay.
Yes. Yeah. Sounds good.
Perfect. Okay. See you later, guys. Have a nice weekend.
Thanks, Luca.
Bye bye.